Hi, Tamal. Welcome again to the banking show. We are discussing the RBI monetary policy. The Monetary Policy Committee today has kept the repo rate unchanged at 6.5%. It is quite on expected lines. Can you take us through the key highlights of the monetary policy?
Well, as you rightly said, it's a third time in a row status quo on policy, which is a consensus decision by MPC, as well as the status quo on the stance of the policy, that's withdrawal of approbation. That's, of course, not a consensus decision. Apart from that, what else? I think most critical part is the inflation projection has been raised, which was again on the expected line. It's a very quick, I would say, in 2 months' time between the last policy and now, June and August, 30 basis point hike from 5.1. Last policy, actually, Reserve Bank of India did cut it by 10 basis points. That has gone up to 5.4%. So inflation projection has gone up. Growth projection has kept it as it is, has been kept at 6.5%. And Governor has repeatedly said that India is a new growth engine for the world. So it's very bullish on growth. Inflation also, he is a bit of a downplaying. He's saying it's very transient kind of thing. But at the same time, he is exuding the same confidence that he would win over inflation. And if things go the other way, RBI is in readiness to act, which means all options are open. Future will be data dependent. Other one action it has been taken in terms of action beyond words is this incremental CRR that has been hiked because there is too much of liquidity in the system. So banks will need to keep 10% extra money with the Reserve Bank of India. But he has repeatedly said that it's temporary. It's temporary just for a month. In September, even if not earlier, it would be RBI would review it. It's look at. I would call it hawkish pause, and why is it? We'll talk to that later.
All right, hawkish pause. Now, some of the things you have touched upon briefly, but let's delve in deeper. What do you think of the inflation projection that RBI has given? And it has shown concerns as well around some areas. Can you explain a little?
Yeah, actually, that's what exactly I wanted to talk about this. As far as inflation has gone up, which is on the inflation estimate has gone up, which is on the expected line. Okay, and at the same time, he's soothing the freight norms. Well, hold on. The core inflation is under control, and this is by the food shock, so it's okay from 5.1 to 5.4. But for the first time, that's a new number Reserve Bank of India has given for the first quarter of the next fiscal year, which begins in April 2024. For 2024-25, first quarter inflation number he has given, this is 5.2%. Now, 5.2% is way above the 4%, which is inflation target, right? So what does this mean? From that point of view, it's a pretty, even though today market has, as you speak, bond market has not reacted much to the policy. It's basically, the governance talk that it's a temporary phenomenon. But in the long shot, you see, inflation continues to be high even next year, 5.2%. What does it mean? Definitely it is hawkish. And it is actually pushes the possibility of the first rate hike further. We are discussing earlier, talking about February or June, something like that. I don't expect the first rate cut. I meant the first rate cut from 6.5%, not in the even in the first of next fiscal year. So it has been moved away because inflation will continue to remain high, and 5.2%, that's the new number Reserve Bank of India has given for the first quarter of next fiscal year.
Absolutely. The other thing that you touched upon briefly is the incremental CRR. What are the implications of this move?
Well, this is not for good. This is very temporary because the system is slosh with liquidity. And as you know, if you have high liquidity, that is inflationary. So how do you manage this liquidity? There are three ways of managing it. One is this: the Reserve Bank of India continues to do soak up the money from the bank through its window, which is which is actually cost to the RBI because it gives money to bank, but the banks are not very excited about keeping the money at the RBI window. That's what the governor said. Second is government historically has done through some kind of MSS kind of bond where the cost is borne by the government. And third is the banking system has to bear the cost. Here in this case, 10% of your additional incremental NDTL. Now the numbers vary, figures vary. It will be anything between 1.1 trillion and 1.2 trillion. That's the extra money the banks will have to keep with Reserve Bank of India, at least for the time being. When did this happen last time? It happened last time post demonetization. As we speak, Italy has gone for a windfall tax imposing on the banks because the fabulous profit they have made on because of the rising interest rates. Now, Indian banks also have been doing great profits. Again, one of the contributing factors is the rising interest rates. So there's one way of taxing the banks, you can say that. And there have been past instances happen. But there's a perception that the bulk of this additional liquidity in the system is been contributed to by the one fact that's the merger between merger of HDFC with the HDFC Bank. So that is the numbers say that. Of course, RBI has not mentioned that. RBI has said that this is primarily because on account of the money coming back, withdrawal of 2,000 rupee notes, and RBI's surplus gone to the government. Those are the contributing factor. And also, governor has made it very clear there is no bank-specific exemption or penalty. It's for the all scheduled commercial banks. So I think this is one way of instead of hiking the rate. Because the inflation is transient, that's what the RBI and MPC feel. That's why it's a very temporary measure. And future actions will be data dependent. That's it. But for the time being, the banks will have to bear with this. Will it have any impact on the lending rates? We need to see. I'll not be surprised if some banks actually hike their loan rates also for the time being.
That's very well summed up, actually, that it is bullish on growth. Of course, inflation challenges persist. Those are the key highlights of the Monetary Policy Committee meeting this time. And please, thank you so much for taking us through and explaining it all in such an amazing way as you always do, Tamal. Thank you so much.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.